Okay, let's just take a quick look at that chart and see what my instant reaction is. You know, so that's terrible. I mean, it's just in this series of lower highs.
Yeah.
At some point, though, this chart is actually trying to find support because it's already down. So that's an interesting. This chart, even though it still looks awful, it's more encouraging than the other ones because there's some levels of support that it's hitting on.
All right, the stock, as we can say, just a simple number, just down about 12% year to date. So we'll look to see if that changes next week. All right, Abigail, thank you so much. Abigail Doolittle, Bloomberg News Chief Markets Correspondent, joining us here in studio.
You know, I said Alphabet because Mandeep's here in the studio, and when I see him, I'm just like, he walks in, I'm like, Alphabet, Meta Platform, Snap. Shares, speaking of Snap, having their best day, and wow, more than 2 years, 1 point today. This after the company offered positive signs that its effort to revamp its digital advertising business are gaining popularity with marketers, boosting revenue and providing stronger competition with those powerhouses. We're talking about, of course, Google and Meta Platforms. Mandeep Singh, Bloomberg Intelligence Senior Tech Industry Analyst, is here in the Bloomberg Interactive Broker studio. We know Alphabet is the behemoth. We've been talking about it today. But we got you back in here, and we'll get you to weigh in on Alphabet a little later, but we got you back in here to talk about Snap, because that really surprised a lot of people. Look at the reaction today.
26%.
Well, it always moves over 20% when it reports. So,
why is that?
Up or down?
Why is that?
That's a good
I
question.
guess, I mean, in the last few quarters, it's been about a lack of profitability because every company in the internet space is focused on cost cutting, and they've been able to show profitability. Snap hasn't. And so that's what's been a big drag. But when you look at the metrics for Snap, any company with, you know, over 400 million daily active users globally, 100 million in the US, there are only 4 or 5 apps like that, right? So that's where Snap always has had the potential. It's just they lack the discipline in terms of, you know, having a good cost structure, showing profitability, and that's why the stock is so volatile.
But are they also just not managing expectations when it comes to guidance, when it comes to...
Yeah, they just haven't had that discipline. That's why I said, like, you give a guidance and you try to beat that. They just have been all over, and that's why you see such volatile stock reaction.
You know, when we were talking about in the lead up to Alphabet's earnings, Mandeep, you talked about the importance of engagement. Snap has engagement?
Yeah, it does. 400 million plus daily active users, and they spent almost 25 minutes per day. And that too, we are talking about the younger demographic, the Gen Zs. The overlap with TikTok is huge. I mean, imagine if there was a TikTok ban. Who gets to benefit? I would say Snap in terms of engagement, because it's the same daily active users.
Well, and then so to build on that, and that's the other thing you talk about with something like an Alphabet and some others, because of the engagement and the access of information data in a Gen AI, machine learning, right? Like world, that's valuable for Snap too.
Absolutely. With all these apps, you know, AI helps improve your feed recommendations. It helps improve your ad targeting. It gives you better tools for advertisers. So AI has got that flywheel for pretty much every internet company that relies on ads. And you see that in the numbers. So Snapchat actually has 9 million paid subscribers now. Contrast that with YouTube Premium, 100 million. They told, like Alphabet told us last night, YouTube is a 60 billion run rate business, growing at mid 25%. So in this case, Snapchat has converted almost 2% of its daily active users to paid subscribers. So they have 9 million paid subscribers that make almost 350 million.
Remind everyone what the paid subscription service is for Snap, because this is the idea of paying for a social media service, I think, is foreign to a lot of people.
It is, and so what they have done is they have added more tools in this paid subscription. It's a $4 subscription per month that you can pay as a creator. It gives you more tools. It has their AI chatbot that you can use to interact. So it's their ChatGPT interface that they have put in the app, where you as a teenager can engage, ask questions. It can personalize things for you. So it's just added features built around AI, and they charge $4 per month. I mean, they may have high churn, but still, it's 300 million in extra revenue.
Is that $4 just for creators, or what about for users? Is that
you can subscribe as a user too? It's got more features than an average user who's a freemium user and goes to the app and consumes the content.
Yeah.
Sees the ad. This one is ad free, and it's got more tools.
It's kind of like what Elon Musk is trying to do with X, and
Yeah.
getting people
Yeah.
to pay for X. Although,
So
we won't
you
get you
will
started on
always
that.
have, low single-digit percentage of daily active users paying for it. That's why in the case of Snap, it's just 2% of their 400 million daily active users. It's 9 million at the end of the day.
So why does Snap though always feel like it's a story that gets smacked around? So where do you place it in the universe? It all sounds positive of what we're hearing from you. Does it not get the right love because it doesn't manage expectations, or what is its place?
And look at the size of the digital ad market. It used to be a duopoly. Now, if you include Amazon as the third one,
Yeah.
it's still, you've got two vendors with Alphabet with over 200 billion in revenue, Meta with 150 billion, Amazon with 50 billion, and then you've got all others. Snapchat with 5 billion, Pinterest with 3 billion, Twitter with 5 billion, TikTok with another 7-8 billion, but it's all others. And so when it comes to all others, think about it from an advertiser perspective. You're going to allocate your ad budget to Google and Meta first. And if you're a retailer, you're going to allocate it to Amazon. And then all others come. If you have budget left, you're going to sprinkle it to Snap, Pinterest. But it does make a difference, for these companies.
Well, and I think about if you're going after a younger audience.
Yes.
It's very targeted, right? That's where you're going to probably want to spend.
Yeah.
So.
But their ad targeting isn't as good as Meta's, because Meta spends billions of dollars just on perfecting that ad targeting, finding that signal, and that's why their ad pricing is so much better.
You said Alphabet, so I'm going there.
Yeah.
Shares higher right now by
Sorry.
10.2%. All-time high today. Stock trading at $171.88. Reached as high as $174 earlier today. It's now a $2.15 trillion company. Yesterday, you told us it was so important to keep an eye on the search business and to what extent search had been eroded by AI, and how Google had been able to offset that. What was your big takeaway there?
Yeah, the incremental margin in search is north of 70%. So part of the reason why they beat on their numbers the way they did is because search margins went up 500 basis points. Now, going into the quarter, everyone was like, oh, search costs are going to go up because generative AI requires more compute, and so they have to spend more on search queries. Nothing like that happened. What they're doing is they are integrating generative AI with their traditional search. And traditional search isn't getting cannibalized. In fact, it's increasing the engagement on the search page. So if you query something now, you do your query, and then there is a follow-up where you can use generative AI, and that is actually increasing your time spent on the search page. I
feel like it keeps people on this. Anecdotally, it keeps me on the search page without actually. You oftentimes don't even have to click through anymore.
Yeah,
it's always giving me the
previously,
best info,
everyone thought the old blue link, the 10 blue link interface is dated, it's going to go away. Well, guess what? It's not going away. And they are actually increasing the number of queries. And I think the thing that really caught the market by surprise was their costs are not going up. It's not as if their gross margins are coming down. They showed 500 basis point margin expansion in the search business out of all the things. And then cloud and YouTube, obviously, that's got a long runway, but yeah, search was great.
Was the declaration of a cash dividend for the first time and the buyback, was that just the icing on the cake, or did that also provide some momentum? Like the run-up that we're seeing in the share price, how much of that is because of that? And just got about 30 seconds.
Look, they are following the Apple playbook. Look at what Apple does. It spends almost entire cash flow on buybacks, and it has a dividend. And they have been so prudent with their capital allocation. That's why shareholders love Apple. I think every company is going that route. Now, the pressure is on Amazon because they're the only one out of the Mag 6 who doesn't have a dividend. So,
you said Mag 6, not Mag 7.
But Tesla, I don't expect Tesla to give a dividend. Sorry.
Yeah. Well said, as always. Mandeep, thank you so much for all your coverage throughout the week. We really appreciate it. Mandeep Singh, he's our senior tech industry analyst at our Bloomberg Intelligence team, joining us right here in our Bloomberg Interactive Brokers studio on this Friday.
Amazon, after market next week on April 30th, we'll bring you those results. This is Bloomberg Business Week.
And I'm John Tucker in the Bloomberg News with this Bloomberg Business Flash. As we race to the close of trading for the week, God bless you. The big tech trade back in full force. We hide nothing from you here on Bloomberg Radio. The big tech trade back in full force, just as Amazon.com and Apple gear up for their earnings. We're going to get those next week, the next cohorts of the so-called Magnificent Seven. Google parent Alphabet and Microsoft doing the heavy lifting today after their blowout earnings reports. Spending on artificial intelligence and cloud computing is paying off. The S&P 500 set for the best weekly performance this year. Now, halfway through the earnings season, a majority of those companies reporting managed to beat expectations. S&P 500 61 points higher. That's up 1.2% at 5110. The Dow Jones Industrial Average up 205 points. That's a rise of 0.5%. The Nasdaq Composite Index 345 points higher. That is up 2.2%. And then Paramount Global's board considering removing the CEO Bob Bakish and putting the film and TV company under a committee of top executives while they are under the process of evaluating a possible sale. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. It is cold in here.
Thank you again. I know
it is cold.
It gets a little chilly, and
I think it's perfect.
I start to get.
Yeah, I think it's great. Hey, John, thanks for that. I appreciate it.
Again, a woman adapting to men's world.
Well, speaking of that, last year in the U.S., startups founded exclusively by women accounted for only 2% of all funding that was invested in VC-backed startups. This, according to the World Economic Forum, citing data from PitchBook. In Europe, Carol, the numbers were even worse. Only 1.8% of the capital raised went to female-founded startups.
All right, so that's how things look when it comes to venture capital. But what about earlier in the fundraising process? How are things looking when it comes to angel investing? Back with us to talk about it with an update, Joanne Corcoran. She is co-chief executive officer and managing partner at Golden Seeds. Just a reminder, they're a network of angel investors exclusively investing in early-stage women-led companies, and she is joining us from New York City. Joanne, good to have you back with us. It's been a little bit of a while, 1.5 years. A lot can happen, certainly. A lot has happened, I feel like, in the market environment, the business environment, the funding environment. Tell us what's changed since we last talked.
Okay, so let's talk about the markets overall in the U.S. first. So 2023 was a pretty difficult funding environment. Venture capital annual volumes were down, 35% from the previous year, and that was down from the year before that. So, but the good thing is that last quarter, those flows were back close to the pace of which they were running for a decade, the pace of 2017-18 before those crazy run-ups. So that's good. Angel volumes, angels were also cautious. When you think about it, many angel investors already have investments. They already have a portfolio. And so many of those people pulled back on investments last year because they had to keep their powder dry, because angels are dependent on follow-on rounds from venture. So while venture is clogged, angels have to be cautious. So far in this year, the first quarter of this year, we are seeing some signs that things are improving, or maybe I should say it this way, they're not getting any worse. So of course we have to consider all the variables.
I'm surprised. Yeah, I'm surprised you're not saying that things are getting better. We've seen a couple of high-profile tech IPOs in recent weeks. Why do you think things aren't necessarily getting better from at least an angel perspective?
Well,
is it rates? Is it all rates?
If things just hold here, that's pretty good, because for the last 2 years, things have been getting worse and worse. I don't need for things to get a lot better from here. I just need things to stabilize, right? Because then we can go back to business. If you think about it, our companies, we're still telling them they need a plan A, B, and C, because they can't depend on getting an easy A round or B round out of venture right now. Venture's still digesting losses. A lot of venture funds are still digesting losses. So I don't want to say it's gloomy like it was the last couple of years.
Yeah.
But we need a few more quarters to feel like we're back at a consistent run rate of investment.
You definitely sound subdued a little bit, like and concerned. You know, what is not happening as a result of the environment that maybe concerns you in terms of, especially when it comes to women-led investments at that very, very early stage?
Well, you know, some good things have happened for women in the angel markets. Okay. I mean, the last 20 years since Golden Seed started has been phenomenally good for women in the angel markets. You know, 20 years ago, women got 3% of the capital. Now, women founders and co-founders get about 40% of the angel capital. And the most important thing is that the yield, the percentage of companies that seek funding that actually get it, it's just about comparable now for male and female entrepreneurs in the angel market. So that's really great progress in the angel markets. And, you know, why did that happen? I think a lot of the reason for that is that angels in the US, you know, individuals who invest in startup companies, about 40% of those people are now women. And that's up, you know, about, I don't know, more than 10 times since when we started in 2004. So that's really great.
Hey, Joanne, I just want to jump in. We don't have a ton of time in it, so I want to jump in here. As I mentioned, it's Golden Seed is a network of angel investors that exclusively invests in early stage women-led companies. I would imagine somebody listening right now might have the question, from a returns perspective, if you're trying to maximize returns, why would you restrict yourself in any way by the types of companies you can invest in?
Well, there's equity issues are one thing, but there is research that say that women are better stewards of capital. I mean, there was a big study put together in 2019 by Boston Consulting and Mass Challenge that said that, and that's a huge data set, that said that women entrepreneurs generate 2 times the revenue per dollar of capital invested. So there is research that say that you want to look at diverse founders. And maybe, I don't know why that is exactly, but maybe necessity is the mother of invention. Think about it that way.
One thing I do think about when it comes to angel investing, right? You know, you can throw a little bit of money at a business, right? And it really can kind of get going, especially in this environment where technology and, you know, social and so on and so forth is so much a part of sometimes a business getting going. Having said that, how many of the angel investments that get made in your world, how many of them actually turn into something that either gets sold or is fairly profitable?
No, so, you know, in the angel business and the venture business, we know that about 35% of companies don't return all the capital. We know that. In venture, I've seen studies that said it's, you know, half. In our 20 years of experience, we've had just about 30% of companies who haven't returned capital. But the rest of our companies, in fact, I looked at it just the other day, of all the money that we've invested, 100% of it has come back in aggregate to our investors, and there's unrealized gains in the existing operating companies of about another 79%.
Yeah.
And on average, our companies are still only a couple of years old. So the thing, though, is that's across our whole investor group. So I can't give you a number for any specific investor, unfortunately.
Joanne, we're seeing so much energy around AI right now, and you've certainly, you and the team have made some investments in AI-focused companies, certainly. But when you look around the landscape, what's exciting to you right now?
Well, companies using machine learning and AI that's big in angel investing, but not the large language models that take billions to affect. most of the stuff that we see, and a good, 10% of our operating companies are machine learning or AI companies, but generally we're looking at companies that are solving a very specific business problem or improving a specific business process. And that's, been part of our environment for at least 5 years. I can give you a couple of cases. We have companies that do scheduling, telephone or text scheduling for real estate companies, for healthcare providers. We have companies that do collections. We have companies that do image creation specifically to match a brand. We have companies that use machine learning to do antibiotic resistance prediction. So, but they're using the company and the company's clients' data. So it's not these things where you need billions and billions to get going.
Joanne, really appreciate you joining us once again here on Bloomberg Business Week. Joanne Corcoran, Co-Chief Executive Officer and Managing Partner over at Golden Seeds. Carol, speaking of investing, coming up, we're going to be joined by the Senior Vice President at Morgan Stanley Private Wealth Management for Drive to the Close.
Yeah, looking forward to it, especially in a week where we're saying it could turn out to be the best week of 2024 so far. So we're going to get into that in just a moment. Right now, though, back to World and National News. Checking in with Amy Morris. Hey, Amy.
Hey, Carol. Defense Secretary Lloyd Austin confirmed today a $6 billion commitment for long-term contracts to provide Ukraine with weapons like Patriot missiles, artillery ammunition, and drones.
I'm also pleased to announce today an additional commitment of $6 billion through our Ukraine Security Assistance Initiative. That will allow us to procure new capabilities for Ukraine from U.S. industry.
Defense Secretary Lloyd Austin laid out broad commitments, but not signed contracts. Those take more time. He says it is their largest security assistance package to date. Donald Trump's hush money criminal trial continues with a second witness taking the stand. Longtime Trump executive assistant Rona Graff testifying that contact information for Stormy Daniels and Karen McDougal were maintained in the Trump organization's computer system. Previously, former National Enquirer publisher David Pecker on the stand testified payments for former Playboy model Karen McDougal were linked to her attempts to restart her career. President Biden is willing to debate Donald Trump ahead of the November presidential election. He said as much during an interview today with radio host Howard Stern. Bloomberg's Jordan Fabian explains what it means if there's no debate.
There will certainly be a void, especially for voters deciding, because these debates traditionally happen later in the cycle, people who haven't made up their mind, those coveted swing voters, they wouldn't be able to hear from those candidates on a national stage, tens of millions of people watching if those debates were not to happen.
Bloomberg's Jordan Fabian on Bloomberg's Balance of Power. Biden previously had declined to commit to debating Trump, saying his participation would depend on his rival's behavior. Trump responded on Truth Social, saying he would debate Biden, quote, anytime, anywhere, anyplace. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
I'm John Tucker in the Bloomberg News with this Bloomberg Business Flash. Stocks looks like the major average is headed for the best week of the year so far. Let's head over to the First Word Breaking News Desk right now for today's afternoon call. And happy Friday, Bill Maloney.
And happy Friday to you, John. U.S. stocks with a bid right now after the tech earnings last night. The Dow is currently up 100.
My general advice is continue to seek out companies or people that are maybe one stage or two stage ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
When I was younger, I used to be in bands. I'd play drums in bands and toured America with them. Did a lot of session drumming, recorded albums. So yeah, it was good fun doing the drumming. The reason I stopped it, well, I still play, but not as serious as I did when I was younger. But drumming doesn't pay the bills. I was never good enough to be able to pay the bills with it, but it was good fun. I started RJF, and the reason I started it was I saw a gap in the market for particular early stage and startup businesses. With the experience that I've got of running businesses, of being a finance director at the very biggest companies in the world to being finance director of small startups, we were looking at providing more than just basic accountancy services. So yes, we'll do all that. We'll do all the basic, all the statutory side of things that you need to do. But there's so much more value that we can add, and I wanted to have my experience to help these startups, because a lot of them don't really know where to go. You can go to your high street accountants and they can do a good job compliance-wise, but you would question whether they've actually been in the fire line of a business. Have you been in a business where you're thinking, how do I pay wages next week? Or business is really successful, what do we do with it next? Or how do we grow it? How do we grow into international territories? Or how do we grow our markets? How do we expand? So a lot of the experience I've seen over the years and seen different types of business in different sectors, I thought, well, it's a real value that I can add to these businesses as opposed to just being an FD, because a lot of these businesses can't afford an FD. But if we can take care of their statutory side of things, the compliance side of things, I'm on hand to be able to help and advise businesses with their growth strategy, or if they're in difficulty, help them through these times.
company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom with your company news. The metric that Tesla told investors early last year was most important to its executives, well, it's in steady decline. The car maker reporting this week its operating margin shrank to 5.5% in the first quarter. That's, in fact, the lowest since the last 3 months of 2020. The measure of profitability was at 16% when Tesla's then chief financial officer said during an earnings call that it was key to the company. Tesla shares have nonetheless soared since the company reported its latest result after Elon Musk teased plans to put less expensive vehicles into production as soon as late this year. Porsche's profit plummeting during the first quarter, the weakest result since listing back in September of 2022. What's to blame? With changeover in models, soft demand in China, that's weighing on the manufacturer's outlook. While you have luxury car makers like Porsche more insulated from downturns, demand pretty much has fizzled in China, where consumers are contending with the real estate crisis, also a weaker economy. And TGI Fridays.
Oh, now you got my attention.
I love their, what are the potato skins? The fried
potato skins?
I think that's what they are.
I think they call them something else. The Friday skins, whatever.
Oh, okay.
And it is they're working with Guggenheim partners to explore ways to address their debt. The restaurant chain is contending with weakening sales. So you haven't been doing your part.
Sorry.
Among the options, the company considering a new private loan that would refinance its $375 million asset-backed bonds. Earlier this year, the Bar and Grill franchise announced it was closing 36 of the underperforming locations across the U.S. And that is your company news.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenbeck on Bloomberg Radio and Television.
All right, everybody, just about 4.5 minutes left in today's trading session, getting ready to wrap up the Friday trade.
No wine today.
We're a little punchy Friday. No wine Friday.
The only reason I filled in for Charlie was
John does a little whining.
that they were going to have alcohol reviews on Friday.
It's not every Friday.
You're kind of in an off cycle here, buddy. I'm just telling you. You gotta talk to the man in the control room.
Oh, man.
And just say, wait, what's on the agenda? Hey, speaking of the agenda, I mean, interesting week, right? Some enthusiasm back in the markets, to say the least, overall. But it was interesting when we talked with Abigail Doolittle. She's like, don't get ahead of yourselves, because if you look in the internals, the candles, the technicals, the things that technicians look at, not looking so great still.
Yeah, but the fundamentals, think about the fundamentals and what we saw from the fundamentals this week, specifically with Alphabet.
I saw one
Microsoft.
fundamental. If you're doing well and actually doing business and selling stuff related to AI, off and running.
Okay, but if you're spending more money on that stuff related to AI than investors want you to, i.e. Meta platforms, then investors are going to run the other way. To be fair, Meta had a great year last year and it was up 40% going into the print.
Right, if you're spending, making the investment, the infrastructure spend and all that good stuff and still trying to figure it out. Right now, it's so good. Although, remember, conversely on that, you saw NVIDIA like rallying, those companies that play in the AI space that are going to benefit from Meta's spending doing well.
Okay, we'll see what happens next week, because we got a slew of big earnings when it comes to the Magnificent Seven. We got Amazon next week, and then we got Apple a couple days later.
Yeah, those are two biggies, no doubt about it, and we'll get through that. And then we're going to talk about this with our TV colleagues in just a moment, but it's going to be a big week. We've got another Fed meeting and decision on Wednesday. I think this is an interesting one, since we know Jay Powell has kind of gotten on board this idea of, high for longer. And so do we get more on that? And then that decision will be followed by a monthly jobs report. Always important. It tells you the health of the economy and what's going on, how people feel.
What do you think is the single most important data point next week?
Well, I'm not looking at everything, but I do think...
But just what's top of mind for you?
I want some color from Jay Powell.
Yeah.
Like, does he go a little bit further in this idea of maybe one rate cut, maybe even none?
I agree. I also think whatever Apple says about China is going to be super important, because the expectations are so low given the third-party research that we've seen going into next week.
Yeah, and Abigail talking about Apple and looking at the charts not looking so good, and we're looking at Apple shares. They are, folks, down about 12% year to date, so it's been a very different story. Do not go anywhere. We're heading over to our TV colleagues, counting you down to the close on this Friday. Beyond the Bell starts right now.
the bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
Now about 2 minutes away from the end of the trading day, Shonali Bassick and Katie Greifeld taking you down to the closing bell. And here to help us take us beyond the bell with a global simulcast, we're joined now by Carol Masser and Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences worldwide to parse through the most crucial moments of the trading day. Carol, my goodness, I have a whiplash today.
Yeah, pretty interesting, right? And even the week overall, when you look at the numbers, we'll get to that in just a moment. I know Tim's on that, but I'm looking at the Philadelphia Semiconductor Index. The SOX is up about 2.5%, and that's despite a mega sell-off in Intel, KLA 10 Core, or KLA Corp, I should say. They had some results that beat. That maybe helped lift the sector overall. NVIDIA is rallying in today's session because of all the AI enthusiasm. So it's interesting when you start to dig a little deeper into the market, you see some differences.
Okay, well, Carol mentioned the positive week that we're having. For the Dow Jones, it's actually the laggard of the week, only up 0.7% over the last 5 days. The S&P 500 up 2.7% over the last 5 days. The tech-heavy NASDAQ composite up by 4.3% over the last 5 days. Kind of all thanks to yesterday, I think, and today.
Now, it's interesting, too, because even with that Intel feeling here that is weighing down that stocks a little bit, the idea here that we've bounced back so drastically and you're seeing the semis get more love than the NASDAQ or the S&P is just an indicator of how much this AI boom is driving this market, isn't it?
Yeah, absolutely. I know that people are a little bit freaked out about what we saw with Meta. Of course, the year of efficiency over, but then you had Microsoft, you had Alphabet coming out with some big AI sort of spend and also some things to show, and that really revived this market.
And there are the closing bells. What a week. Friday is here, and the NASDAQ up more than 2% to close out the day. And you have, remember, those tech-heavy stocks really driving all the indices here. The S&P 500 still ending the day up 1%, ending the week, the best week of the year. And the Dow Jones Industrial Average up about 0.4%. A lot of green on that screen.
Yeah, for the week overall, as we said, S&P up about 2.6%, the NASDAQ up about 4.25%, and the Dow Jones Industrial Average just about 0.2%. But yeah, definitely a much more risk-on tone this week, Katie.
Meanwhile, you take a look at the sector level, and it's pretty much an even split, interestingly enough. You take a look at what is working today, and it's communication services in a big way. That sector up about 4.7%. Then there's a big drop-off there. Information technology, still a big rally, up about 1.9%. Consumer discretionary and materials also having a good day as well. You take a look at what didn't really work today, and it was utilities. I mean, this was a big risk-on day. Utilities, of course, on the heels of that, down about 1.1%, and energy also off by about 1%, Carol.
All right, let's get to some of the individual gainers, guys. You know where I'm going to go. It's Google, Alphabet. That stock up just shy of 10% in today's session. I'm looking at the S&P 500. It's your numbers 2 and 3 gainers. So top gainers in the S&P 500, number 1 gainer in the NASDAQ 100. As we know the story, right? Leaping into the $2 trillion market cap club because of the move up in today's session. Revenue beating on strength of its cloud computing unit, cloud demand fueled by growth in AI, and oh yeah, introducing a dividend and a $70 billion buyback program. So taking a page out of Apple's book and a few others. Not Apple's, I should say Meta, right? Or Apple. I guess they're all
We'll find out.
What did Mandeep say that now is it 6 of the Mag 7, right? Or
Yeah,
5?
Are doing dividends.
Are now doing dividends. So now we got Alphabet playing catch up. Microsoft, of course, an outperformer in today's session. A gain of just shy of 2%, finishing off its highs of the session. Sales profit beat. Again, sales of its Azure cloud computing platform climbing 31% in the quarter. That was a beat. About 7% of that increase was attributable to AI compared with about 6% in the previous quarter. So that's growing. And then one more AI-related name. Every time there's some enthusiasm around AI, NVIDIA wins, up about 6.2% in today's session. Number 3 gainer in the NASDAQ 100, rallying back from last week's sell-off. Some of the chips giants' biggest clients doubling down on AI. Stock is up roughly, I think, around 15% this week, so it added a lot to its market value. We know, again, whether it was Alphabet, whether it was Microsoft talking AI, it really helped out this name, which is up almost 80% so far in 2024, Tim.
Okay, you got the gainers, Carol. I got the decliners. Not that easy on a day like today, but I do want to start with shares of Intel. So got to go there, tumbling the most in almost 4 years intraday today after it gave a lackluster forecast for the current period. It indicates that it's still struggling to return to the top tier of the chip industry. Shares finishing the day down by 9.2%. It did close off lows, but at one point it was down. It closed off the lows, so closed down the worst since January, but at one point the worst in almost 4 years. The outlook does signal that the push by Pat Gelsinger to revitalize is going to take more time and money. Also, shares of ExxonMobil plunging the most in more than 6 months. This after higher than expected maintenance costs diminish its oil refining results. Shares falling today, marking the oil giant's worst intraday decline since it announced that $60 billion takeover of Pioneer Natural Resources. That was back in October. As for what caused this, we saw various mostly non-cash accounting items behind the rare earnings miss, posted an adjusted earnings per share profit that was 13 cents below what analysts had forecasted. And then ticker TEAM, Team for Atlassian. It's the maker of Jira, Confluence, Trello. Fell after the co-CEO, Scott Farquhar, announced that he's stepping down from the company that he helped start more than 2 decades ago. It was a surprise move, and it certainly rattled investors. We actually saw the company report earnings yesterday, and they reported pretty good fiscal third quarter results. Revenue, $1.19 billion, above the average analyst estimate. Profit, excluding some items, was 89 cents per share. That beat the 62 cents per share projected by analysts. Still, the company added customers more slowly than anticipated. The co-CEO is stepping down. Farquhar plans to spend more time with his young family, improve the world via philanthropy, and help further the tech industry globally. That's according to the statement that we got yesterday.
Let's talk about the bond market now, because of course there were a lot of interesting moves there. You saw the 2-year, of course, kind of be flat on the day, but remember, you're looking at a 4.99, just under 5% on the 2-year. That has drifted about 2 basis points higher on the week, just ahead of that Fed meeting next week. And the 10-year yield, interestingly enough, a bigger move, closer to 6 basis points moved higher on the week, which gives you a yield curve even more deeply inverted here. I know a lot of people are not talking about that anymore, but I'm certainly still watching it, and you do have a little bit of movement here. Yields a little higher, about 3 basis points along the longer ends of the curve. Even if you didn't see the 2-year move that much, the levels you're seeing here are pretty stunning.
Well, we're all going to be watching the U.S. yield curve next week as we get ready for another Fed meeting. That, of course, that decision on Wednesday. Then you've got a jobs report on Friday. But on this Friday, this is what we're focusing on, because Goldman basically has a message for its bankers. You're looking to go to Paris. You got an important meeting between July 24th and August 14th. Gotta go, gotta go. We're on to you.
Okay, here's what they said in a message, and a spokesperson for the bank said, quote, "In line with previous Olympic Games, we've asked our people to effectively manage their spend and ensure coordination with firm-sponsored events for our clients during the period of the Paris Games." Oftentimes, events like this could be settings for employees to meet with clients, but they also throw opportunities for staff angling for junkets, which banks attuned to keeping a lid on costs.
Nobody's ever done that. Wait, I gotta go. There's something important, an important meeting.
U.S. Open, anyone?
Yeah. Oh, wait.
Yeah, people like to go to that.
That's work.
I mean, you can't blame them for trying. It makes a lot of sense. And I don't know, it makes sense, though, too, why Goldman would want to keep a lid on costs. I actually am going to Paris for the Olympics, and it's going to be a lot of
What are you going to watch? I'm guessing you're going to watch track and field.
That's all I'm going to
But it's not like you said to your editors, hey, there's this story I've got to do. I've got to do it in Paris, and it's between this time frame. That's not what happened.
A few people in this building have asked me if I'm going for Bloomberg, and sadly the answer is no. I'm just going as a regular old person.
No, that's a good thing.
Paying my way.
Well, you're better off that way, I've got to say. You want to enjoy it while you're there. Not
That's
have to
true. I will enjoy it.
that you were looking at your emails. You can just be gone, Katie, and we'll enjoy it for you, too. I want to talk about something else. For those who are sticking around that week to be working here, is like there are very expensive coffee makers out there. If you haven't seen it, guys, Whirlpool is actually now looking to diversify even more and sell $2,000 espresso maker. They're betting that those who are spending a little bit too much money at those high-end coffee shops or even at Starbucks will instead take that $5 and camp it in the bank of buying their new automatic espresso maker.
Hey, listen, it's like a little luxury. And, if you're going to do that, you might want to actually put some decaf coffee in there. Everybody makes fun of decaf coffee.
Yeah.
But Pursuits, our Bloomberg Pursuits team, saying it's becoming the hottest thing in coffee right now. And there's actually a U.S. Brewers Cup, a competition. And for the first time in the competition's 20-year history, a decaf coffee took the title, so don't make fun of it. But one thing you might want to make fun of is Tim, because you got to ask him about his coffee machine.
Hey, anytime, I'm a big coffee guy at home. Anytime anyone wants an espresso, you're welcome to swing by.
It's a really nice machine, we hear.
Is it decaf?
We don't use decaf beans in our
Very
house.
good.
There's no
Carol, I'm
point.
going to keep making fun of decaf. What is the point of decaf coffee, truly?
I got through, it's really sad, college on decaf coffee and what is it, the instant coffee. It was
Instant
really
coffee.
Carol.
I know. Don't
That
judge
actually
me.
tastes pretty good. It's a weird one, but it does.
All right, guys,
There's a lot of controversy.
we're going to need a lot of coffee next week between earnings, the Fed, and of course jobs. So we're going to call it a wrap. Have a good and safe weekend, everybody. We'll see you again. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We call it Beyond the Bell. We'll see you again on Monday.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week, and Carol, I know that you felt the same way because it was kind of the first
We were
thing I
sending
talked
it
to
to
you
each other
about.
this morning.
Yeah, this morning when we saw each other. When this story popped up in my alerts last night, it was like a whoa moment. It's from the Wall Street Journal. We talked about it a little earlier with Professor Joseph Stiglitz about how former Trump administration officials are coming up with plans to take on the independence of the Fed. This is according to the report. Now, the Trump allies have even discussed the notion of the president being involved with setting interest rates and having the authority to force out Fed Chair Jay Powell should Trump become president again, even though Powell's term isn't up until 2026.
Well, we've got a great roundtable to weigh in on this story, which we should note has not been independently confirmed by Bloomberg News. Christine Harper is Bloomberg News editorial board member, also the co-author, along with the late Paul Volcker, on Keeping at It, The Quest for Sound Money and Good Government. Also with us is Steve Matthews, Bloomberg News economics reporter who covers the Fed. He joins us from our Atlanta bureau. Christine right here in our Bloomberg Interactive Brokers studio. Steve, I do want to start with you. How is something like this even possible in a global and monetary financial world where the U.S. central bank reigns supreme, I think many would argue, because of its trust and independence?
Well, the Fed, to be clear, has said nothing about this today. They don't want to have anything to do with it. They're in their pre-meeting blackout period. But in the past, Chair Powell has said that he thinks that, essentially central bank independence is really super important, that the central banks that are independent of the executive branch do better, and there's like lots of international experience that that's the case. If you go back a few years when there was a conflict between former President Trump and Chair Powell, and there was talk about whether Trump would fire Powell, Powell said basically, I'm here. I've gotten a 4-year term. I'm not leaving, and you can't fire me. You could fire him for some kind of ethical issue or some kind of breach, but you can't just fire him because you don't like him or you don't like the policy. So I think, he will probably not want to talk about this at the press conference next week or any time during this political period, but their opinion is that they are independent and, that's that.
Well, Steve, just mentioning something, Christine, that Carol and I were talking about as we were preparing for this segment, the pressure that former President Trump did put on Jay Powell during his administration, talking openly about the Fed should be cutting rates right now. Then you go back in history, there's President Richard Nixon, on then Fed Chair Arthur Burns. A lot has been written about that. Give us sort of a history lesson here with the idea of other administrations and to what extent they've been involved or not involved with Fed policy.
Sure, Tim, happy to do that. As you said, I worked with the late Paul Volcker on his memoir, and he wrote quite a lot about the history of the Fed's fights for independence, going all the way back to World War II, when it was effectively an arm of the Treasury Department, ordered to keep rates low, ordered to buy Treasury bills at, high prices to kind of help finance the war. At that point, they kind of dealt with inflation by setting, the government set prices and set wages. I don't think anybody wants to go back to that era. That changed with Bill Martin, otherwise known as William McChesney Martin, who was one of Paul Volcker's heroes, who helped negotiate the Treasury-Fed Accord in 1951. And then he quickly became Fed chair, and he stood up to a series of presidents, especially LBJ, during the Vietnam War when he didn't want, for the same reason, whenever there's a war, you don't want interest rates to go up because it's expensive, because you're borrowing a lot of money. And was, according to some reports, according to Paul Volcker, like physically assaulted by LBJ. And then Volcker himself, saw what happened with Nixon, as you mentioned, with Burns. Burns had been a political advisor and was trying to help Nixon get reelected. And the result was a lot of inflation. And then Paul Volcker came in to try to clean it up. So he really believed in Fed independence. And he made it very clear in the memoir that, it's never going to be popular to raise interest rates, and also regulatory crackdowns are not popular.
Well, Christine, how do you think about it? You've been here at Bloomberg a long time, reported on so much, and so much entrenched in the financial markets. So much of the markets working, and certainly on a global level, is having that trust that we have a secure and independent central bank. Without that, what are the possible implications?
Well, I mean, obviously this isn't a perfect example because it's such a different country, but look at what's happening in Turkey. I think the last read was something like 70% inflation, and that was a case where they didn't believe in central bank independence, and now they've changed their mind. They realize, it's like 25% interest rates or something hot, maybe higher. Right. So I think, Wall Street kind of, I think, generally gets it, but also, look at Trump's a former real estate developer. I bet if you ask a lot of real estate developers right now, they wouldn't like interest rates to go down too. Right. So, there's reasons to believe that he wants to have exercise control because presidents historically have wanted to. There's a fantastic meetings of a Fed meeting with Harry Truman where he met with the board of the Fed during the 1951 and pled with them to keep rates low. So this is a kind of not surprising, but it's up to the Fed chairman, as Steve mentioned, to kind of stand his ground. And Volcker did it, and McChesney Martin did it. And, I suspect Powell, who said he liked Volcker's book and who is, showing his desire for independence, I suspect he would stand up too.
Hey, Steve, to Christine's point about the Fed chair standing up, apart from that, what are the guardrails that are in place to prevent politicization of the Federal Reserve?
Well, the Fed policy, at least on the monetary policy side, you have 7 governors. They are appointed for very long terms, so that more than half of the governors have been appointed by Democrats. There are a few governors appointed by Trump himself, but even like Chris Waller, who's one of the last appointments by Trump to the Fed board, he's written extensively about the importance of Fed independence. He's kind of a conventional economist. And everybody who's at the Fed believes that it's a nonpartisan institution, that it's really important that it be kind of a technocratic institution that they, call balls and strikes, and that they're not trying to be influenced one way or the other for political reasons. So there would be intense resistance from basically everybody, the Republicans and the Democrats on the board. And of course, the way the structure is set up, you've got, the 12 Fed presidents set up that are chosen by boards of directors, and they all believe in independence. So it's an institution where the chair is important, and even if you were able to replace the chair, which presumably, 2 years into the new presidency, Trump would be able to, it's not something easy to change.
Well, that's what I was going to say, and just saving like 30 seconds, Christine. I mean, it could happen, though, right?
Sure.
I mean, we can't just rule this out.
No, we can't rule it out, but as Steve says, there are ways in which the Fed is protected. The 14-year terms for the governors is pretty helpful. But yeah, I mean, there's a lot of ways that presidents have applied pressure, and even if they don't do it overtly, like some of the ways that are being mentioned, I mean, there's a famous story in Volcker's memoir about how Ronald Reagan tried to lean on him to keep interest rates low. So, Fed independence is a daily struggle, I think.
All right, yeah, great stuff. And I'm almost guessing a little bit that a question might come up in the press conference next week to Jay Powell.
I bet he's going to have a page in the binder with a prepared response, maybe.
All right, thank you both. We so appreciate it. Christine Harper, editorial board member here at Bloomberg News. Her book, co-authored with Paul Volcker, Keeping at It, The Quest for Sound Money and Good Government. Such a great history lesson on so much when it comes to really a revered head of the U.S. Central Bank. And Steve Matthews, always a go-to for us on all things the U.S. Central Bank, economics reporter here at Bloomberg News in our Atlanta bureau. You are listening and watching Bloomberg Business Week. Carol Master, Tim Stenovic, and this is Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Alphabet and Microsoft leading the stock market today toward the finish of the first winning streak in the last 4 weeks. Alphabet jumping about 10% after bruising past expectations for profit last quarter. Parent company of Google also said it's going to start paying a dividend. Investors authorize a program to buy back stock. This is all the news that we learned after the close with their close yesterday with their earnings report. Worth noting, Alphabet closing above the $2 trillion market cap mark. Microsoft, meanwhile, closing above 2% after reporting stronger profit and revenue than expected the day before. And the market lift from AI may not be over anytime soon. We also got some inflation data. The Fed's preferred gauge of inflation rising at a brisk pace in the month of March, but that failed to lift rates. Right now, as we look at the close, S&P 500 finishing up 51 points, a rise of 1%, ending the day at 5,099.96. Should I round that up? No, I guess not. Dow Jones Industrial Average ended the day up 153 points. That was up 0.4%. The NASDAQ Composite Index was up 316 points, ending the day 2% higher. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. And that's your Bloomberg Business Flash. Carol and Tim.
Hi, John Tucker.
Thanks, JT.
Thank you so much.
Appreciate it. Okay, so a little over a decade ago, Candy Weens found herself at her doctor's office for what she thought was a routine checkup. But routine, it was not. Her blood pressure clocked in at 200/110. It's what's referred to as hypertensive emergency, and leaving it untreated, Carol, can lead to a stroke, heart attack, organ failure, and even death.
It's unbelievable. She was ordered immediately to go on bed rest for 3 days, start Xanax and blood pressure medication. Given that she had a lot of work to do, she was reluctant to go home, and that, she found, was the issue. It was the beginning of understanding what would become an incredibly important chapter in her life. And I have to say, getting ready for this book, we've been kind of passing it around to colleagues and just talking about it and stress and kind of managing work.
Well, we got Dr. Candy Weens with us right now. She's Senior Fellow and Director at the Masters in Medical Education program at the University of Pennsylvania. She spent many years since then researching burnout and stress resilience. Dr. Weens, welcome. Before we get to that doctor's appointment that was so pivotal in your life, take us earlier to your childhood, because you've got a really interesting story, and it's certainly related to your book.
Yeah, thank you, and thanks for having me on. Yes, so my story is maybe perhaps unique to everyone else's story, but we all have a story about our childhood and the ways in which we learned how to deal with stress and the ways that we learned how to cope and potentially what might make us vulnerable today. So in my case, I was raised on an Indian reservation by a single mom. My parents divorced when I was 5. I had a number of adverse childhood events when I was younger, which contributed to some of the things that I experienced. But one of the things that is really foundational to my patterns of coping with stress is that I grew up very much as an insecure overachiever. Insecure meaning that because we lived on welfare and Medicaid and food stamps and often suffered from food insecurity, I was very, very insecure about my future, my financial future. And I was aware enough to know that if I needed to work hard to break the cycle of poverty in my family. And so I knew that I wanted to go to college. I was quite motivated intellectually to want to learn, but I wasn't in the right circumstances. Long story short, I moved in with my dad when I was 12, and the conditions changed. I went from getting almost F's in school because I wasn't in the right environment to getting straight A's living with my dad. And so that started another pattern for me, which was this need for external validation. You know, I really, I thrived getting recognition for the hard work that I was doing. I learned that the harder I worked, the more I got recognized for my work. And that set me on a path to potentially overachieve my way through things, including having 3 jobs in college while I was going to school full-time, paying for it myself. All of that set into motion this pattern of overworking and trying to protect myself from going back to the life that I once lived when I was younger. So that's all of what kind of contributed to this workaholic kind of approach that I had to work. And then when I had that life-threatening health crisis that woke me up in 2011, that was really the result of me working on overdrive almost all the time. For me, and I hear from many of the people that I interviewed today, burnout was the baseline. We didn't use the word burnout a whole lot back in the 90s and early 2000s, but I think that's what I was experiencing. I just wasn't aware exactly what it was and what it was doing to me.
You know, it's interesting. We live in a culture, and I feel like I grew up in a family where it was like, yeah, work hard. That's what it's supposed to be at. You're a workaholic. It's a good thing. Like,
I feel like it was like that was the thing until like a few years ago.
Well, that's a really good point, right? And I do wonder. You know, we thought with COVID that maybe we were thinking balance. Yeah, look at what we can do. We can actually have a better life. I want to get to what, part of your title is about emotional intelligence and helping us out when it comes to being burned out. What exactly is emotional intelligence?
Yeah, emotional intelligence is a set of competencies that have to do with our awareness of ourselves, mostly our emotional self-awareness, but includes other awareness aspects. The ability to regulate or manage ourselves, our behaviors, our thoughts, our emotions, as well as our ability to understand the social environment that we work in. So for example, understanding the politics of the team that I might be working on or within my organization. But it's also being able to work very effectively in that social or in that political environment. So it's self-awareness, self-management, and then social awareness and relationship management.
What about the idea of, perfection being the enemy of good? Like the idea that when something is done, it's done. And I think that that's what a lot of people struggle with at the workplace, I think, is, and it really can burn people out because it takes so much time and energy, is these incremental changes that are not that important to a certain project that people are working on.
Yeah, so perfectionism is one of the traps that I write about. I write about a number of self-inflicted stress traps, also known as thinking traps, or in the sciences, we call them cognitive distortions. It's meaning that we think about something that, that causes us to overwork or causes us to put more effort into something than we need to. Perfectionism is one, imposter syndrome is another, having overly high expectations of ourselves, having overly high expectations of other people even, being overly engaged in our work. All of these things are stories or assumptions that we operate under and that cause us to feel more stress or amplify the stress that is caused by whatever we're experiencing and sets us up to be prone for burnout.
What's the balance, though? Because, man, you're going to have, first of all, media is a stressful industry. The clock is ticking, you got to hit deadlines. It's just the way it is. Stuff is thrown at you last minute or news develops and you just got to kind of roll with it. I would say that there's a fair amount of us who kind of thrive on that, and that's part of the fun of the industry. Having said that, what's the balance between a stressful situation that leads to burnout to, you're going to have days where you're stressed, and that's just part of a job and a work life. So how do you kind of get your head around what's good and what's bad?
Yeah, in professions like yours where you have pretty much high intensity almost all the time and a lot of things coming at you unexpectedly, that those type of jobs do require quite a bit of recovery time. Recovery in the form of sometimes it's micro recovery, so shorter breaks throughout the day, reconnecting with your family or friends, even for a couple of minutes if you can, going outside, whatever it is for you that helps to renew your energy levels and your spirit. For other people, it's taking extended periods of time. So if you think about recovery, though, one of the things I encourage people to focus on is when you're recovering, watch what you're doing to comfort yourself versus really renew yourself. Comfort yourself as in binging on some program or eating junk food or doing something that feels good in the moment but doesn't necessarily really renew your energy levels, like a good night's sleep with an hour or two of deep sleep.
So, I recently said to somebody, I feel like I walk in the door and I'm always behind. And they're like, that's a good thing. That means you got a lot going on. Having said that, I do think about leadership in all of this and how a leader needs to look at, hey, gang, we're going to have a tough week. We just need, all hands on deck, if you will, versus, wait a minute, this is too much for my team and they're going to break. So advice to leaders or what they need to know. We have about a minute or so left.
Yeah, I call it the sweet spot of stress. We all need to know what our personal sweet spot of stress is. And for a leader, recognize for the team, how much can we push the team to really perform under intense conditions without them slipping over into the distress zone where it's going to negatively affect their performance. So it means tuning into your employees, having open conversations around stress levels are going to escalate in these high intensity periods. And we're going to take recovery breaks together. We're going to do things to support each other so that we don't all slip into distress at the same time and potentially burn out.
Hey, Dr. Wiens, we do have time for one more question. What's your strategy? I mean, what do you do? How are you going to, decompress after the workday this weekend?
Oh, that's a great question. Yeah. So I haven't seen my son for a couple of days. He's been busy with soccer and school. And even though I've had a lot going on, I am just so excited to see him and hug him. Honestly, like that's one of the things that renews my spirit. And just being able to look him in the eye and hear about his week, that to me, it reminds me of why I do the work that I do, and helps me just really renew my spirit.
Tim and I were just talking, and we said that's the one thing, like in the middle of the day, if like all of a sudden, your kid calls or there's pictures or something you look at, like it really kind of recharges you in a big way.
Nice reminder of like the really important stuff out there.
Yeah, exactly.
Absolutely.
You gave us some great
perspective.
You gave us some great things to think about as we go into the weekend. Dr. Weens, thank you so much. Dr. Candy Weens, Senior Fellow and Director of the Masters in Medical Education Program at the University of Pennsylvania, joining us there from Philadelphia. Her new book, it is called Burnout Immunity, How Emotional Intelligence Can Help You Build Resilience and Heal Your Relationship with Work.
Hey, coming up, it's today's big take, one of the most read stories on the terminal about the billionaire founder following the money south. Before that, though, a check on the latest world and national news with Amy Morris in the Bloomberg 99.1 Newsroom in D.C. Hey, Amy.
Hi, Tim. Defense Secretary Lloyd Austin has confirmed that $6 billion commitment for long-term contracts providing Ukraine with weapons like Patriot missiles, artillery, ammunition, and drones.
If Putin got his way in Ukraine, his fellow autocrats would draw a dangerous lesson. And the whole world would become more chaotic and insecure if would-be aggressors believe that they can rewrite borders by force and make people live in fear.
Defense Secretary Lloyd Austin laid out broad commitments, but not signed contracts. Those take longer. He says it is their largest security assistance package to date. President Biden is willing to debate Donald Trump ahead of the November presidential election. During an interview today with radio host Howard Stern.
Can I tell you what fantasy I had? I don't know if you're going to debate your opponent. I am somewhere. I don't know when. I'm happy to debate him.
Biden previously declined to commit to debating Trump, saying his participation would depend on his rival's, quote, behavior. Trump responded on Truth Social, saying that he would debate Biden, quote, anytime, anywhere, any place. For the second time in recent months, President Biden's administration has delayed a sweeping plan to ban menthol cigarettes. Now, Biden's top health official gave no timeline for issuing the rule. The announcement is another setback for the FDA, which drafted the ban and predicted it would prevent hundreds of thousands of smoking-related deaths over the next 40 years. And King Charles will resume his public duties next week after his cancer treatment. Buckingham Palace says Charles will make a public visit to a cancer treatment center on Tuesday. It'll be the first of several appearances he'll make in coming weeks. It'll also be his first public appearance in about 3 months. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks got a tech-driven lift today. In fact, it was the best week for stocks in 2024. 6 of the 11 major industry groups in the S&P 500, they ended higher. The gainers, communication services, as well as information technology. And that's home to Google parent Alphabet. Shares closed up about 10%. Microsoft, those shares closing up just under 2% in today's trading. The message they delivered to investors from their earnings reports that spending on AI and cloud computing, that is paying off. And over at Wedbush Securities, senior analyst Dan Ives says, you know what? It is pretty tough to bet against AI in this environment.
This was a drop-the-mic moment for AI, from Alphabet, from Microsoft. This 1995 moment is just starting. And that's why I think the bears for tech continue to go in their caves into hibernation mode.
I should mention that Google did close at a record today and also crossing $2 billion, $2 trillion in market cap. Again, it was up just about 10% in today's trading. Tech earnings overshadowing the economic data we got today. The Fed's preferred gauge of underlying U.S. inflation rose at a brisk pace in March, reinforcing concerns of persistent price pressures. The S&P 500 ending the session up 51 points today, up about 1% at 5,099.96. Can we just say it's 5,100? The Dow Jones Industrial Average.
You just did. You can.
You can't do that.
Did you say can or can't?
5,099.
You're such a stickler. Dow Jones Industrial Average ended the session up 153 points, up 0.4%. The NASDAQ Composite Index was up 316 points at the close, and that was 2% higher. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash, Carolyn.
You ready to go to Florida?
Am I ready to go to Florida?
Yeah.
Yeah.
Okay, good.
Are we going?
Then listen up. Yeah, we're going to
Check
Florida.
out this story, okay? It's today's big take. It's one of the most read stories on the Bloomberg terminal. It's about the billionaire founder of the related companies following the money that's flowing south by bringing his influence to everything from real estate to schools and healthcare.
Yeah, this is a pretty cool story. We're talking, of course, about Stephen Ross, perhaps best known as the mastermind behind New York's Hudson Yards complex. Natalie Wong is Bloomberg News U.S. commercial real estate reporter. She joins us right now on Zoom. Natalie, Stephen Ross, so well known, right, for what he has done certainly here in New York City and his impact on the real estate landscape. Feels like everybody in the financial set is going down south and to Florida specifically. What is he up to?
Right. So this is his latest legacy-making project. He's best known, as you mentioned, for basically creating a new office district on the far west side of Manhattan. But since the pandemic, like many of his peers who moved down there in favor of lower taxes and what they call a more business-friendly environment, he has really gone all in on South Florida, specifically Palm Beach County and West Palm Beach, where in the past 4 years, he's grown his employee count there fivefold. He's bought up a bunch of existing office towers and land to build even more office towers. And right now, Related owns nearly half of all the existing office stock in the area, which
amazing.
Is way more than what they had pre-pandemic.
What's interesting, though, is unlike some of the other folks who may have made their way down to Florida during the pandemic or post-pandemic, he actually has roots in history in South Florida that go beyond his ownership stake in the Miami Dolphins. Give us the history there, because that's something that I learned in your piece.
Right. So when he was a teenager, he actually moved with his family to Miami Beach. His father was helping to own a family-run hotel there. So he's had roots in the region for quite some time, and he's also owned a home in the Palm Beach area for decades now. So it's, he definitely goes down there quite a bit, but it really wasn't until post-pandemic 2021, 2022 that he officially moved down there and became a permanent resident of the state of Florida.
Listen, if you build it, they will come. Sometimes that works, but it really works if you build kind of the infrastructure around it, and whether there's schools and shopping and retail. Talk to us about kind of how he is working that all out, the amenities, to kind of service people who might want to live there.
Right. So what's interesting about this is Steve Ross, for decades has sort of spent his career plotting out live, work, play environment for the wealthy. You can see that in Hudson Yards where, within a few blocks, you can work there, you can go to the most luxurious restaurants, and you can even live in the priciest condos in the city. But he's kind of going beyond that in West Palm Beach, too. I mean, he's definitely also bringing, key New York retailers and restaurants to the area, like Harry's. We also reported that they're in talks with Italy to open a location there as well. And they're also building luxury residences. But Ross is kind of going beyond that, which is one of the most interesting parts of the story. Is he's not just a real estate developer here and trying to make his dreams a reality and to make Wall Street South a reality. There's infrastructure that Palm Beach County is severely lacking, and that they've noticed when they're talking to potential companies that want to relocate their employees, their managers there, that one of the biggest things that's lacking is sort of educational institutions of the prestige that, people in New York, Boston, Chicago, or California might be used to. Healthcare is also lacking in some cases. The joke among locals was that if you got sick beyond just a small cold in Palm Beach, you're better off getting on a plane than going to a nearby hospital. And transportation is also something that they're trying to work out. So, Ross is kind of going beyond just office development.
Which is like, as you say, going beyond, which is kind of how your story kicks off about looking to build a local outpost of Nashville's Vanderbilt University. I mean, that's what you're saying. He's trying to kind of bring them down, and that would be a part, Tim, of that community.
Hey, Natalie, I'm so interested in this idea of his legacy here, because for a while during the pandemic, it seemed like Hudson Yards was going to just go bust. I mean, there were so many issues post-pandemic, given that it was essentially a ghost town because of so much office space and what happened during the pandemic. It's improved certainly a lot since then. What about this whole idea, like in South Florida, demand being there for what he's building? Like, if you build it, they will come mentality here. Like, this is by no means guaranteed to be a success.
Right. I mean, the difference with what they're doing in West Palm versus, New York's big office supply is that West Palm, the office supply is still very small there. And so they are waiting to sign leases with these companies before proceeding to build these bigger office towers. And so while they're trying to attract companies, one of the main things that they're finding are roadblocks is lack of institutions. So, which is why, Ross is hosting these fancy fundraisers and trying to bring Vanderbilt over, trying to bring K through 12 schools over, and hospitals too.
Is Ross alone in this, or is he getting an assist from some other folks in the real estate space?
Ross is working with other developers. We mentioned one called Frisbee. They're a local developer there who is also instrumental in talking with Vanderbilt University. They're working very closely with the city commissioners, with the mayor. Everyone sort of is on board to make this Wall Street South a reality. But, right now there is a slowdown in the momentum that we've seen post-pandemic going into South Florida. And so that's something that they're going to have to wait and see if this momentum that they've really been banking on will sustain.
Well, and there's a great quote somewhere in the story I was just looking for, but each place like around the country has a certain culture and so on and so forth. And I mean, some of that's a challenge, right? They need to attract workers and some other things to really make this work.
Definitely, right. So Ross, is very much a proponent of the politics of Florida and the business-friendly side of what the state is doing and what the city is doing. And so for him and his peers, that may be a bonus and maybe why others are moving. Obviously, Ken Griffin, not necessarily Palm Beach County, but Ken Griffin, most notably moving the headquarters of Citadel to Miami, is a big boost for the region. But, for a lot of other employees who may be in cities that are, more Democratic leaning and maybe a little bit harder to them to move to Florida, where things are definitely moving more to the right.
Here's the quote. It's great. It's Mitchell Moss, professor of urban policy and planning at NYU, and he says it's very hard to change a social system. It's much easier to change a physical system. You can't change a culture by bringing in institutions. They have to be grown and nurtured over time. So there are some challenges, right, that he definitely faces in dealing this, but, pretty remarkable. And if, look at what he did with Hudson Yards. That was a place where old railroad tracks and train tracks, and nobody went on that part of New York. And then look at it.
And supposedly they're going to reopen that structure over at Hudson Yards to people soon.
Oh, that's interesting.
Yeah.
What?
Go ahead, Natalie.
No, the vessel. They're planning on against them.
Yeah, I mean, it's definitely it's a destination point too. I know for people who come into the city. Natalie, thank you so much. Great story. It is the Bloomberg Big Take, and it has been among our most read stories on the Bloomberg today. Natalie, by the way, is Bloomberg News U.S. commercial real estate reporter joining us there on Zoom. Interesting.
Check out this story again. The Bloomberg Big Take today on the Bloomberg Terminal.
your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom with Look at Company News. I feel like I'm under pressure since you teased this. Sam Altman of OpenAI and the chief executives of NVIDIA, Microsoft, and Alphabet, among technology industry leaders, joining a new federal advisory board. And this is focused on the secure use of artificial intelligence within U.S. critical infrastructure. This is the Biden administration's latest effort to fill a regulatory vacuum over the rapidly proliferating technology. The AI Safety and Security Board, that's part of a government push to protect the economy, public health, and vital industries from being harmed by AI-powered threats. Whirlpool struggling to sell large appliances, so it's hoping you're going to pay big appliance prices for a high-end espresso machine. The company launching a new KitchenAid automatic espresso maker this month in the U.S., costing as much as $2,000.
What?
That's it?
The goal
is the grinder included?
Is that a mortgage payment?
Yeah.
Depends on your mortgage.
Mine's a bit wet anyway.
Talk to us more about that, Mr.
The goal is to hook Starbucks customers who are used to shelling out $5 for fancy coffee drinks. Whirlpool's revenue has stagnated with fewer U.S. home sales and budget-conscious shoppers putting off upgrading their dishwashers or refrigerators. So naturally, they'd spend $2,000 on an espresso machine. And this is a cautionary tale when dealing with Amazon returns. A pet kitty survived almost a week without food or water after being accidentally shipped off in an Amazon return box by its owners. This according to the New York Post, so it's got to be true. The feline named Galena was found inside the box by a startled employee at an Amazon warehouse in California, April 17th, 6 days after disappearing from her home in Utah. That's your company news.
This is Bloomberg Business Week with Carol Masser and Tim Stennebeck on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. Defense Secretary Lloyd Austin confirms $6 billion for long-term contracts providing Ukraine with weapons like Patriot missiles, artillery ammunition, and drones.
Also pleased to announce today an additional commitment of $6 billion through our Ukraine Security Assistance Initiative. That will allow us to procure new capabilities for Ukraine from U.S. industry.
Defense Secretary Lloyd Austin laying out broad commitments, but not signed contracts. Those take longer. He says it is their largest security assistance package to date. Now, for the second time in recent months, President Biden's administration is delaying a plan that would ban menthol cigarettes. The announcement is another setback for the FDA. They're the ones who drafted this ban, and they predict it would prevent hundreds of thousands of smoking-related deaths over 40 years. Donald Trump's longtime personal assistant, who worked for his real estate empire for decades, told a jury today that she has a vague recollection of seeing Stormy Daniels at Trump Tower sometime before 2015. Rona Graff testified under a subpoena that required her to take the witness stand. Her questioning was brief, but it did tie Donald Trump to Stormy Daniels. And President Biden says he's willing to debate Donald Trump ahead of the November presidential election. He said so during an interview today with radio host Howard Stern. Bloomberg's Jordan Fabian explains what it would mean if there were no debate.
There would certainly be a void, especially for voters deciding, because these debates traditionally happen later in the cycle, people who haven't made up their mind, those coveted swing voters, they wouldn't be able to hear from those candidates on a national stage, tens of millions of people watching if those debates were not to happen.
Bloomberg's Jordan Fabian on Bloomberg Balance of Power and Global News, 24 hours a day. And whenever you want it with Bloomberg News Now, I'm Amy Morris. Back to Bloomberg Business Week with Carol Masser and Tim Stennebeck.
All right, Amy, thank you so much. John Tucker, Amy Morris wants to know, how is the cat?
I told you, the cat.
I need to know, how's the cat?
Oh, the cat survived.
Yeah?
It was resold on Amazon.
No.
The cat was fine.
Okay. Whew.
John Tucker.
You don't know that.
Of all the stuff I did today, that's the one
Amy,
story you need
I
to
don't trust that
flesh
answer.
out.
It felt like a throwaway. All right.
I trust you, John Tucker.
Maybe
We're a little traumatized.
Maybe we should all message Amazon. How's the kitty cat? Just gonna say. That's no longer company news. It's kitty cat news. It's kitty cat news.
All right.
I had to do it. All right, folks, getting ready to wrap up here on Bloomberg Business Week. Quite a week, as we said. Big rally in the equity trade.
Yeah. Also, there's a trial happening in Lower Manhattan of the former president. Among the most read stories in the last hour on the Bloomberg terminal is an update to that trial, which we have not covered today yet, Carol. The former president's longtime personal assistant who worked for his real estate empire for decades told a jury that she has a, quote, vague recollection of seeing Stormy Daniels at Trump Tower sometime before 2015.
All right, so that continues, something we'll certainly follow into next week. Next week, do not forget, on Wednesday, you've got another FOMC decision. We will obviously be locked into that, as well as the press conference with Jay Powell, see what he gets peppered with when it comes to questions, and a jobs report on Friday.
We got Apple earnings on Thursday. We got Amazon on Tuesday. And those are just a couple of the big names reporting next week.
Do not forget also our Bloomberg Business Week weekend show. Thank you all who have been listening and kind of writing in on about it for us. We really appreciate it. It's at 8 a.m. Wall Street time on Bloomberg Radio. We have Enon Kreis,
CEO of Mattel.
Yeah. What else do we have?
We got the author of The Everything War on
That's
Amazon's
right.
quest to own the world, and a combo of rosé and regenerative farming.
Yeah, we did a little sampling. Sorry, John, that was last Friday.
I missed it.
You know what they say about life? It's all about timing. Hey, a big shout out to our team. We truly mean it. We say it every week because we could not do it without all of them. Colin Tipton, Anthony Mancini, Meredith Frank, Juan Torres, Sarah Livesey, Sebastian Escobar, John Tucker.
Oh, you're so welcome.
Elizabeth Cedrin,